Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market continued its rebound in the last week, completely ignoring the government shutdown or the coming debt ceiling battle, and it has its best start to a year in 13 years. That's a gain in this first 2 weeks of about 3.4%. And for the gains that we've seen in these last several weeks off of the low that we saw, about 10.7%. So this has been a very big rebound. Of course, December was the worst Decembers that we've seen since 1931, and a rebound does make sense. Investors were relieved that U.S. and China are talking regarding the trade war, and they're bargain hunting, as many of the stocks that got very trashed have had good rebounds. Of course, there are many of those that have not, and I did a video on Thursday talking about a bunch of those groups that still look very weak. Investors are also taking heart from Fed Chair Powell, who's been out there talking a lot. Now he's more dovish. Well, he went from more hawkish to more dovish to more hawkish to more dovish, back and forth and back and forth. And plainly, the Fed is learning that it's possible for 9 men and 3 women all to be impotent at once. There must be some unknown disease in that room that they sit in, because these central banks are not able to affect the markets very much anymore. Economists are practically unanimous that 2019 is going to be an up year. That's even with a slightly inverted yield curve, which they believe gives no chance for a recession, and it probably doesn't signal a lot. I was reading great reports that come out of Miss Shedlock from Global Economics, and he said that the 17 largest Wall Street firms, they're all predicting between 6 and 30% gains for the year. To me, there's a lot more to look at in here, as the world economies are really faltering badly. In fact, Germany industrial production is plunging. It fell 4.6% year over year, and has been really negative over these last several months. And there could be a recession already there in Germany. Of course, that's the largest country in the Eurozone, and France, very similar going on there with their yellow vest protests, and now those demonstrators trying to encourage a bank run to really weaken that government. This is all going on while the European zone is still in their zero interest rate policy. They're talking about not raising rates till the middle of this year, and now they're talking about stopping their QE, but they're still at ZERP. And you have, of course, Japan still at -1/10. And they have got plenty of problems over there. So it's just adding and adding up that there are faltering economies around the world. Ford and Jaguar are having huge job cuts in Europe, and that's going to affect Greece and Italy, those weaker countries, also in a big way. China growth, they're now looking like sub 6%. That was when, they used to be over 11%. And I'm reading things that say, when you look at the real growth, not these inflated numbers that they put out, it may be more like about 2%. And they are scrambling to revive that economy right now. And the trade war is hurting them. And there's no organic growth that's happening over there like it did before. And they're offering some pretty huge tax cuts starting right now and some very large infrastructure spending. So they are trying to improve things. The yuan is starting to spike on the upside if you take a look at that. And I mentioned Japan with those minus 0.1% rates and not changing, even though they're starting to jawbone about that. And Japan's economy is barely growing also. In fact, if you look at their recent consumption numbers, they have been very weak. So Japan also faltering. And then you have socialist Canada that depends so much on energy prices, which have fallen. And their bankruptcy filings are soaring there in the area of Canada, way up to our north. And we have also huge problems going on in Australia, which is starting to have a construction there just coming apart. So I just named a bunch of countries. So the world markets are really, really weak. And the U.S. market, kind of stable, we'll call that right now, and that's still with extremely low interest rates. And you could see the markets getting so nervous as the interest rates were going up, and the high yield markets, those bond markets, absolutely in free fall, and then having a big rebound now, which has helped our stock market also. No matter all of the nationalistic sentiment that's going on here in this country and around the world, no matter how much they want to be individual countries, it's still a world economy. And there's no way in this modern age that we can get away from that. And while the sentiment is such that, well, we probably won't have a recession this year in the U.S., it could be all of these other countries that begin to pull it down, and that the U.S. may get dragged down by this worldwide slowdown that's going on. So the recession may not come from here, but it is coming. And the equity markets, which are now in a rally, are likely to take another big down leg before the end of the first half of this year. We think that is extremely likely. Let's take a look now as we look at our 60-minute chart of the S&P 500. We do this every week because what we want to do is show you what went on that has moved markets. And of course, the markets kind of move on their own, but then some of this news does cause things to happen overnight, during the day. So we like to show you the 24-hour trading that's happened out here throughout the week. And there was a lot of news items, as you could see in here. And basically, just take a look and you could see the market has been moving up all week, just kind of having a few little downticks, as you see going on here on Friday. Monday, German factory orders plunged. Eurozone stocks fell and our futures followed. OPEC came out with production cuts and oil gained in a big way, and that saved the market. Energy stocks really started to fly, and you could see Monday then was that upside day. Here on Tuesday overnight, Samsung warned, and we got this downtick as the markets in Europe and in Asia started to fall. And here we had a comment from the president that trade talks were going well with China, and that helped lift the market back overnight. Trade talks, no deal yet here on Tuesday morning. And China said, well, the United States made a modest offer. China made some modest offers. They kind of understand each other better, but there was nothing there. The more and more they thought about what was going on brought disappointment. But then the buyers came in again, as you can see, as there are bargain hunters out there in the market. Here, Apple cuts more production of the iPhone X. As you can see, that kind of affected the market in early morning. Trade talks, there was some optimism here, and commodities started to gain. Oil jumped over 3% there. And then the news came out from the USTR, their statement that they had discussed fairness and reciprocity, and China was going to buy more grain and energy, but there is no deal, and it's just talk. And they've put this off for some while here. So that brought some disappointment in the market. And then the Fed minutes came out here in the afternoon. You could see that kind of big hour right there. And they're going to be patient on hikes, and they comment on low inflation. And then really when they started to digest the trade talks here on Thursday or Wednesday night overnight, the market really started to get sold. And what didn't help was retail stocks here early on Thursday morning, as they had some big declines on warnings from them, especially out of Macy's. And then Powell was sitting and addressing the economic club, and he said he was flexible on rates, and there was a dovish upside move right over there. And he said he's worried about debt. It gave you a little bit of a downtick right over here, but overall, a good strong day here on Thursday. And Friday, the CPI comes out year over year, up 1.9%. It was down 0.1 on the month. And now Friday, the market looks a little bit tired, as you can see that. And it actually has looked tired here in these last few days. It's been just chopping around. We went from gaining, as you can see, to actually just getting flat right over here. And the market overall, though, was pretty strong for the week. All of this news out there, all of this machinations that we're hearing about the trade war, all of anything else that's going on, well, at the moment the market is ignoring just because it looks cheap to a lot of investors who are looking for dips to buy, as they have done for these 9 years. But we do think this time it is different. The stock market for the week: Dow Jones Industrials average, the S&P 500, the NASDAQ, all up right around 2.5% for the week. The Russell much better, as interest rates are seemingly on pause. And the Russell, which is made up a lot of those companies that need to borrow a lot of money because they're losers, they had solid gains of 4% on the week. Bond market, 30-year down about 1 point as that safety bid starts to disappear. And we had about a 3 basis points gain in the 10-year notes. Dollar, very choppy, little tiny downtick to the downside this week, and gold a little uptick, about $4 to the plus side. The oil market still gaining back. Now, the oil market, which traded down to about 42, trades up to about 52. So that's about a 23-24% gain off of its lows. And it had 4 up days this week until giving just a little bit of ground here on Friday. So that is the everything that has happened this week, and my opinion about what I think is a very false rally that is going on in the stock market right now. Make sure you follow me on Twitter at askSlim, and become a YouTube subscriber and give me a thumbs up if you like this video. And also, I want to ask you to go to our site and take a look at our memberships. We have so much out there in content that I think is very valuable to traders and investors. We do videos every single week beyond what you see right over here, and if you've never been there or you're not a member, you're going to be very interested, especially if you're learning about markets, learning about trading and investing. We have 8 categories of videos, all the way from what you're seeing right now to stock sectors, where I analyze the individual groups, trader psychology. I've been a coach, facilitator for 24 years, and I am also certified in EQ, which is emotional intelligence. So I coach a lot of people, and I bring all of that knowledge together. And trader psychology is some very great videos that are in there, and many, many more. Future Speak, which I look at 24 different futures, 6 segments of the futures market. We do that every Wednesday. So you're going to want to look at that and see what all the videos are. There's about 400 videos that I have in that library, and there's about 180 or 200 of them that are very educational for you to learn about trading. Our Tools for Techs category has about 75 videos about charting and studies that I think are very valuable. That's just in level 2 that we have there. Also, you get our stock index report, which you can subscribe to on its own, which is just an amazing look at our analysis, which you see once a week, and our projections and ranges and everything on the major stock indexes. That's included with level 2 also, but you can purchase it separately. Level 3 is our trade setups and our rankings on the 84 best traded symbols. Has our option bias indicator, and of course you get everything that's in level 2 and our stock index report. And level 4 is my charts. You get to have those on your Thinkorswim platform, our preferred broker, along with everything else. 84 different stocks that I do all this deep cycle analysis on that you can put up on your charts. We have just an amazing other group of enhancements that are coming on that we're going to be testing in the next few weeks. So make sure that you go and look at our memberships. And I tell you what, if you've never been a member and you want to try us out for a month, write me and tell me what level you're interested in, and I'm going to send you a half price for 1 month, 50% off for the month. You don't like it, just unsubscribe, tell us you want to cancel. You don't have to pay any more money, and you'll get a good opportunity to look at this. Can you imagine the binge watching you can do for just $18.50 if you take the trial on level 2? So I think that's something that you really could consider. And we really want your support. We have a huge staff that is responsible for bringing all these things to you. I have social media assistant in Eric. I have an analytical expert in RV. Matt is our business development guy, plus our support team that you talk to when you write to us, and interns and people that are writing scripts for us. And we can only do that if you support us. So I'm really asking you to come in, take these specials, and take a look at what we have. And right now, I'm going to show you the best and worst stocks for the week.
Here come the best stocks for the week. These are stocks that had big rallies, usually driven by good news. Watch as Slim shows his cycle analysis and discusses if there are more gains to come, or if the odds are high these upside moves are selling opportunities.
All right, so when I look at the best and worst stocks for the week, I do this a little differently than I do when I do my short-term view, and that is I focus on weekly charts. That's where the core of the work is, though. On our, that was too soon. On our 84 different stocks that I do the deep analysis on, I also do weekly, and same thing on the 24 futures. So it's a huge amount of work to keep up with this, and overall we look at over 300 stocks plus futures and ETFs. So it's almost 400 symbols that we do all of this work on, and then we bring that to you. So when I review the stocks every single week and I bring you the best and worst, what I try to do is bring you the stocks that are the biggest movers, that have some news and maybe the most inviting patterns to look at, which I think are of value both in opportunities and also in the learning process. So the next couple charts I'm going to show you have a lot of ability to learn about the style of analysis that we do here, and that is cycle analysis. Here is a weekly cycle analysis chart on Bed Bath & Beyond, the biggest mover for the week. Now this chart has colored phasing on it. It essentially shows you when you're in a rising phase, or when you're in a corrective phase, or when you're in a negative phase. And it's green, yellow, and red. And down over here you can see the ideal cycles. That's the rhythms of the market. And each of those show you where the ideal low would come. Cycles measured from low to low, from one low to the next low to the next low. And you could see the rhythm in here that is beautiful when you look at Bed Bath & Beyond. This has been a negative stock. It has, not only can you see that it's gone down, but you can see the stages in the cycles of how it went down, how it broke down and then had these big red zones, rallies up to resistance levels and breaks again, up to resistance levels and breaks again, and follows this downward cyclical action. Now we're getting this very big up week, just 2 weeks into this move. 27% up for the week. Their earnings were up. They were better than expected. And this is, a good bounce after losing 80% of its value from its peak over the last couple of years. So that is, it's not unusual to get a bounce. And if you look at the PE here, up about 7 times, this basically, it's been a low PE for a while, and the earnings keep getting lowered. So that's what happens. And you get into these value traps where you think you could buy them because they're cheap. And finally, they do work as you get this big upside bar right over here, and this will be a green zone that it's in as soon as we put that in there. So you can see as I take just these last couple of cycles right in here that it's moving up into the resistance area. We think that it will stop in here between this area 15 and a quarter and 1630 and not be able to make a lot more upside ground. Also, that 34-week moving average coming down, and that is usually a signal that it is running into some problems. You could see that 34-week moving average, how it created resistance all the way down, and it's getting up there right now. I would not buy Bed Bath & Beyond on this pop. I would, though, buy it if it pulled back because, like I said, it's kind of early in this upside move. You just watched the opening to the askSlim Market Week show. To watch the complete show, just become an askSlim Level 1 member. It's still no cost to you. It includes my analysis on the best and worst stocks for the week and my projections for the short-term view of the coming week. There's always a chance to learn a lot about special situations, cycle analysis, all kinds of technical analysis, and of course, potential trading opportunities. We have an unbelievable offer here in that you not only get the full askSlim Market Week show, but you get the Market Week archives, which were not available to you unless you were a member before. Plus, you will get special Level 1 videos that we put in there from our premium library, and sneak peeks to new product launches, and, of course, more specials along the way. Become an askSlim.com Level 1 member, no cost to you.
I'm going to the city and I'm gonna do a slim.